Okay, good evening everyone. Sorry for delay by couple of minutes. So, in the last class, we started with this new chapter, that is preparation of final accounts for sole proprietors. So, we understood the trading account and P&L account. What are all the things that will come under trading account and P&L account, right? So, yeah. So, I'll just quickly go through the book, the format as well. So this is the specimen of trading account. So trading account for the year ended, whatever, if you are preparing for 31st March 26, it will be 26. If it is for next year, it will be 27, like that. Okay. So this, if you observe carefully, trading account for the year ended, That means what? Trading account is prepared for the entire year, but it is prepared up till this date. You're understanding? Trading account for the year ended, meaning what? You are preparing the trading account for the entire period as on 31st. That means till here, till 31st March, you are including all the transactions in this account. So what are these? The first one is sales. We have seen. Sale return inward is nothing but sales return. Okay. Then closing stock. Here opening stock, purchases, return outward is nothing but purchase return, which will get reduced from purchases. In the same way, sales return will get reduced from sales. Next, direct expenses, then your gross profit. Clear? What is the difference between trading account and P&L account, Appa? Can anyone tell me what is the difference between trading account and P&L? You can just give me one point. What is exactly prepared? First thing is, trading account is prepared to arrive at gross profit or gross loss. Here it is prepared to arrive at net profit or net loss. Correct? Here, what is the data that gets captured? All your purchases, closing stock, opening stock, and direct expenses. So, in other words, it will help you to capture cost of goods sold, sales, and direct expenses. Here, what are the things? All your indirect expenses and indirect income. Yes, the result of trading account will be gross profit or gross loss, and the result will be transferred to P&L account. Will be transferred to P&L account. We have seen, correct or no? Gross profit, we took it down. Gross loss also we took it down. Right? The balance in profit and loss account, that is net profit, is transferred to capital account. Sir, why net profit is transferred to capital account? Why net profit is transferred to capital account? Because whatever profit is being earned, it is for whom? It is for the owner. Right? So, owner is represented by which account? Capital account. So, whatever profit you are earning will be transferred to your capital account because that profit belongs to owner. Clear? This is the specimen of P&L. Here also, profit and loss account for the year ended on whatever. Say, for example, 31st March 2026. That means it is considering entire transaction is summarized into this. That means all the 12 months data will come into this. So here, by gross profit, if it is profit, it will come from here, right? If it is loss, it will come from here, gross loss. And all the expenses, salary, office rent, printing and stationery, telephone, postage, insurance, audit fee, legal charges, electricity, go on. You can go on. In the same way here, discount received, commission received, reserve for discount on creditors, non-trading income, bank interest, rent, property, dividend from shares, interest earned, by gain on sale of machinery, by gain on sale of investment, everything will come on the indirect income in P&L account. We have seen in the last class. Hello. I hope you remember. It's not something new which I am discussing. Where did we see? Yeah. See. Yes, we have seen everything. Okay. Yes, sir. Review question for you guys. Please answer. Trading account reveals which profit or loss? Trading account reveals dash profit or dash loss? Come on, guys. Please answer. Online students. Yes. Trading account reveals what? Blank profit, blank loss. Here it is gross profit, gross loss. Profit and loss account reveals net profit or net loss. Yes, good. Expenses appear on which side of the trading account and P&L account? Can you tell me? This is trading account. This is P&L account. Where do you show expenses? This side or this side? We show it on this side, correct? That is debit side. Yes? Okay. You leave this, you leave this. We have yet to discuss. Usually carriage inward will appear in trading account. Carriage outward will appear in P&L account. Remember this point. Very, very important. This one. Carriage inward will appear in trading account. Carriage outward will appear in P&L account. Sir, what is the reason? The reason is simple, appa. Carriage is nothing but direct expenses. Is what? Direct expenses. See, without paying the transportation for purchases, you cannot bring those purchases into your, or those goods into your godown. Correct or no? If you want to bring the goods to your godown and sell it, you need to first purchase the goods. Okay, sir, I purchase the goods. Is purchasing the goods enough? No. After purchasing, you have to bring the goods to your godown. To bring the goods to your godown, you need to pay transportation. So, without transportation, making the sales is impossible. Correct or no? Why, sir? Because, yeah, you purchase the goods. The moment you purchase the good doesn't mean that you can sell the goods, right? You still have to bring the goods to your place. Correct? Yes. So, to bring that, you need to pay transportation expenses. That means what? Transportation expenses becomes necessary to bring the purchases into your godown, or even transportation expense becomes necessary to your sales. So, it is more or less directly relating to your sales or purchases. Whereas carriage outward, you may say, sir, carriage outward is also dependent upon sales, sir. It is also depending upon sales. No, it is not depending upon sales. I'll just give you example. If you go to Vishal Mart and you buy, say, 10 items, will you ask Vishal Mart to deliver this 10 items to your home, or you will pick it up by yourself? You will pick it up by yourself, correct? Suppose if you buy 100 items, then you may ask Vishal Mart to deliver. Right? So that means, understand carefully. A person can buy this much, no need transportation. A person can buy this much and may need transportation. Clear? So it is not directly correlated to sales, and there is an option when it comes to transportation. Say, Vishal Mart may say, okay, sir, we will deliver, but for delivering, we will charge 1000 rupees. Okay. But what I did, 1000 is very expensive is what I felt. So what I did, I went outside. There was an auto standing. So auto wala said, I will deliver it in 500 rupees. How much? 500 rupees. Now whom will I pick? I'll pick the auto stand wala bhaiya over others. Correct or no? Because that auto wala can deliver the same goods at 500. So observe carefully. Carriage outward is always optional. If customer specifically asks us to deliver, then only we will take the transportation headache on our head. Otherwise, we will not take. So that is why carriage outward, that is transportation on sale of goods, is not going to come in your trading account because it is not directly correlated to sales. A person may take transportation from us, or person may not take transportation from us. Is it clear? Yes? Okay. Anyhow, these 2 points we'll discuss going forward. Don't worry. Okay. Yes, rest of the activity, please do it at your home for your clarification. It will be better. Now, coming to the next item, very, very important item. Balance sheet. Okay. So this is how your balance sheet will look like. So balance sheet is always, understand, balance sheet is always prepared as on 31st March 2026. Look here very carefully. Balance sheet as on 31st March 2026. Whereas when it came to P&L, what is the sentence we wrote? Profit or loss account for the year ended 31st March 26. Look here. For the year ended, but here as on. As on. That means what, sir? What exactly are you trying to say? Always remember, when it comes to P&L, the entire 12 months transaction is captured. That means if your P&L is showing sales of 1 lakh rupees, this 1 lakh might be split like this. April 50,000, May 2,000, June 5,000, July like this. Correct or no? From April to March, all the transaction put together, it will come as 1 lakh. Understanding? But in balance sheet, it is not like that. Sir, what do you mean by it is not like that? I will tell you. Listen to me carefully. Suppose my bank balance is 2 lakh rupees. Is the 2 lakh rupees bank balance is for whole year? That means for full year it is 2 lakh, 2 lakh, 2 lakh, or the balance is 2 lakh as on this date. This bank 2 lakh this 2 lakh, is it available for entire 12 months or this 2 lakh is available as on 31st March? It is showing as on 31st March. In April, your balance might be 10 lakh. In May, your balance might be 2 lakh. In March, in March, your balance might be 50,000. On 31st March, your balance is 2 lakh. You're understanding? So, whatever items are displayed on the balance sheet, the balances are as on that date. That means a balance sheet is prepared on a particular date and the value of those items are to be read as on that day. That means if you are standing on 30th June and you are preparing balance sheet for 31st March 2026. Sir, what you are telling, sir? When I am standing on 31st June 2026, why will I go back and prepare the balance sheet? Hello? In real world, that is how it is done. 31st March, your year end closes. Doesn't mean that on night at 12 o'clock only, we will start preparing the balance sheet. Understanding? It will take some time. It will take a month or 2 months to prepare the balance sheet. Sir, why it will take some time, sir? Because you have to do lot of adjustments. Clear? So, if you are preparing the balance sheet on 30th June 2026 and the balance sheet is as on 31st March 2026, if the bank balance is showing 2 lakh on the balance sheet date, doesn't mean that the bank balance is 2 lakh on 30th June. The bank balance might be 3 lakh or 1 lakh or 10,000 also. You're understanding, everybody? Is everybody following? This is the balance on this date. The balance will change on this date for sure. Clear? So that is why we always consider balance sheet is prepared on a particular date. The assets and liabilities shown in the balance sheet is as on that date, whereas your P&L consists of entire year transaction. Clear? Okay. Now coming back. Okay. Sir, we have already seen profit and loss account or trading account is prepared for what items, Appa? For income and expenses. Correct? For income and expenses. Now, I always told you before we started the basic class, what are the 5 items which are necessary for the world of accounting? What are those? Assets, liability, income, expenses, capital account. Correct? Assets, liability, income, expenses, capital account. Your income and expenses now is being shown under trading and P&L account. Now you need to show the remaining 3, correct or no? Assets, liability and capital account. Where do we show it that, sir? Where shall we show that? We will show that in balance sheet. We'll show that in balance sheet. Clear? What are the items that will be visible in balance sheet? Capital, liability and asset. Capital, liability and asset. So here on the left side, it is called as liabilities, and on the right side, it is called as assets. On the left side, it is liability. On the right side, it is asset. Remember this. Sir, can I write ulta? No. Don't write ulta. This is how we follow. This is the rule. We need to follow the rule. So on the left hand side, it will be liability. On the right hand side, it will be asset. Here, amount. Sir, why 2 amount, sir? One is for inner calculation. Once you do the calculation inside this table, you can write the final amount outside. Okay? Okay, sir, fine. I hope everybody remembers what is liability. It is a obligation arising from past events from which future economic benefit outflow is expected. Right? Yes, sir. What is asset, sir? Resource controlled by the entity from which future economic benefit inflow is expected. Right? So, First, let's go for asset. Okay. Okay, sir. Let's go for asset. Now, till now, what are all the assets you have heard about? In the last chapter, what are the assets that we heard about? Sir, in the last chapter, we discussed about tangible. Sir, in the last class, we discussed about tangible asset and intangible asset. Now, this tangible and intangible asset put together is called as fixed assets, or the right word as per accounting standard is PPE. Sir, what is PPE? Property, plant, and equipment. Property, plant, and equipment. So fixed assets are PPE. Fixed assets is the word which we used to call earlier, but after revision of accounting standard 10, we are calling it as PPE. Okay. So first thing that will come will be fixed assets. So under that, what is the thing which will come, sir? Tangible asset. Second, sir, intangible asset. Then, sir, then tangible or intangible asset under development. Under development, or you can even say WIP. Sir, what do you mean by under development or WIP, sir? What do you mean by this, sir? Under development or WIP means, suppose for example, you are constructing a building. Say you started constructing the building in the month of January, right? So the building will get over, say by example, next year March. So this year, whatever expenditure you are incurred in the month of Jan, Feb, March, it will not be called as fixed assets. Why? I mean directly called as tangible asset. Why? Because it will come under fixed assets only, but it will not be called as tangible assets because the building is not yet ready to be used. The building is not yet ready to be used. When the building gets ready to be used, then only it will be classified under tangible asset. Otherwise, it will be shown under tangible or intangible under development or WIP. One more point you remember, depreciation is charged. Depreciation is charged only when asset is put to use. When asset is put to use. Sir, what do you mean by put to use, sir? That means the building is being constructed. Can we start charging the depreciation from this year only? Answer is no. Depreciation can be charged only when the asset is put to use. What do you mean by put to use, sir? Put to use means when we start using that asset in our business. The moment you put to use, this will automatically get classified from here to here. The moment it gets classified here, depreciation will come into picture. Am I clear? Yes? Anybody is having doubt? Okay, sir. Done. I understood about this, sir. Let's move ahead. Okay, fine. Okay, next. Sir, what is next item, sir? Non-current assets. What is that? Non-current assets. Sir, what is non-current assets? Please explain. Please explain what is non-current asset. Okay. Okay. Yes, sir. Please explain what is non-current asset. Just a second. I'll just make these things correct so that we have enough space to write down. Okay, it is not coming. Let's ignore it. Okay, sir, tell me, sir, what is non-current assets? Understand, there is a concept of current and non-current. Sir, what do you mean by this current and non-current, sir? Understand, the logic is simple. Current items are those items, current, say, let's take example of current assets only. Current assets are those assets which will be realized, in next 12 months or accounting period, during accounting period. Non-current assets which will not be realized in next 12 months or accounting period. Sir, you have written the definition. Now please explain, sir. Okay, I will explain it to you. Listen to me. One of the example of current assets is your fixed deposits. Your fixed deposit. If your fixed deposit is, say for example, for 12 months. If your fixed deposit is for 12 months, then my question to you, whether realized meaning, understand the meaning of the word realized. Sir, fixed deposits, if it is for 12 months, now my question to you, whether in the next 12 months, that fixed deposits can be converted into your bank balance, sir? Yes or no? That means you can end the fixed deposit and convert it into your bank balance. Yes, this is called as realization. Ending the fixed deposits and bringing that amount to your bank balance. This process is called as realization. You're understanding? So, if your fixed deposits is going to get matured in the next 12 months, it will become our current assets. Sir, what do you mean by matured in next 12 months? Realized. What do you mean by realized, sir? Process of maturity of fixed deposits. The moment it gets matured, the fixed deposits will get closed and the amount will get transferred to our bank balance. You're understanding? This process is called as realization. Understanding? Yes. So, if your fixed deposits is going to get matured in 12 months, this will fall under current asset. Next example, your classic example, debtors. Who are debtors? Debtors are our customers. Sir, why our customers are called as debtors? There are two kinds of customers. One, good customers. Right? What are the good customers? Who pay us and take goods. No problem here. There are other customers who are also good. You can't say bad because you are doing business. But these customers take the goods, then pay after some time. After some time means how much, sir? Usually 15 days to 60 days. How much? Usually 15 days to 60 days. So, this type of customers are called as credit sales. That means what? You are selling the items, but you are selling it on credit. That means when you sell, you will not immediately receive the money. You will receive the money from 15 days to 16 days. Anywhere between 15 days to 60 days. Some person may come and give in 3 days only. Some people may come and give in 7 days. Some people may give on 60th day. Some people may give you on 45th day. But you will get money, but you will get money after sales is done. That means you are selling to them on credit. ಗ್ರಾಹಕರು ಸಾಲ ಕೇಳಬಾರದು, ದೇವರಿಗೆ ಸಾಲ ಕೊಡುವಷ್ಟು ದೊಡ್ಡವನು ನಾನಲ್ಲ, ಗ್ರಾಹಕರು ದೇವರಿದ್ದಂತೆ. ಎಸ್, ಹ್ಯಾವ್ ಯು ರೆಡ್ ದಿಸ್? Just like that. So these are those grahakaru who are going to ask you credit. Okay, this type of customers are called as debtors. Debtors are the customers who have taken goods from us, but they are goods or services from us, but they have taken it on credit. So that means money is yet to be received from them. Money is yet to be received from them. Clear? Yes, sir. Now, this debtors, as I told you, when will you realize? Between 15 days to 60 days. Now, 15 days and 60 days is within 12 months, correct or no? Is within 12 months. 15 days and 16 days is less than 12 months, correct or no? So it will come under current asset. Sir, here what do you mean by realization? You have used the word realization. Now, with respect to debtors, how do you relate the word realization? Simple appa. Debtor balance in the cash ಗೆ convert ಆಗದ ಯಾವಾಗ? Now, debtor, say for example, debtor A, B, C and Co is showing 1 lakh rupees. This means what? I have to receive money from A, B, C and Co worth 1 lakh rupees. Correct? Huh? Yes, sir. I have to receive how much? 1 lakh rupees from A, B, C and Co. The moment A, B, C and Co pays me 1 lakh, this will become 0. That means no more receivable, but my bank balance will go up by 1 lakh. This becoming 0 and my bank balance going up by 1 lakh is called as realization. This is the process of realization. That is converting their receivable balance to our actual bank balance. Clear? Everybody is understanding? So those are called as our debtors. And usually 99.99% debtors will always come under current assets. Why? Because it is always assumed that they will pay within at max 3 months. So 3 months is less than 12 months. So your debtors will always come under current assets. Okay, sir, fine. Now you told me, I understood, sir, fine. Now tell me what is non-current assets, sir. Non-current assets, as I told you, which cannot be realized in next 12 months. Sir, what do you mean by that? Fixed deposit kept for 3 years. Fixed deposit kept for 3 years. Now, next year, in the next 12 months, can you convert this fixed deposit into your bank balance? Answer is no. So automatically it will become your non-current asset. Clear? Okay. Next, one more example. Rental advance. You give rental advance, sir? Whenever you go and take a property as a tenant, then the owner or the landlord will ask you to pay some money as advance. Usually it is 11 months. 11 months rent as advance. Correct? Yes? Now, if you make rental agreement for 3 years, now my question is, your advance is stuck, the rental advance is stuck for 3 years, correct or no? Your rental advance is stuck for 3 years, correct or no? Yes, sir, correct. So, can you realize it in next 12 months? Answer is no. I can realize when, sir? If I am exiting the property, that means if I am vacating the property, I can realize. That you can do when? After 3 years, sir. So, it will become your non-current asset. So, in short, the assets which can be realized within 12 months are called as current assets. The asset which can be not realized within 12 months are called as non-current assets. Now you may come up with a question. Sir, fixed assets also can be called as non-current assets, sir. Correct or no? Fixed assets, we keep on telling. The asset which is used beyond the next financial year. That means we are going to use it for more than one financial year. Correct? Which will be used in the business to generate the revenue. Now you may ask a question. Sir, can we call fixed assets as also non-current asset? Answer is no. Why no, sir? There also we are going to use it for more than 12 months. Correct? There you are going to use it for more than 12 months. Here the word I am using is, realization. Here the word is realization. In case of fixed assets, you don't realize in future years. Rather, you use the fixed assets in next 3 years and generate some money out of it. You are understanding? Yes. So, realization is used for current and non-current assets, whereas in fixed assets, it is use. We use the asset. Clear? Everybody is following? Okay. Now coming back to non-current assets. So under non-current assets, what all will come, sir? There can be investments. FD is an investment, correct or no? You may put in bond, FD, debt security, so many things. There can be your loans and advances given. You have given loan to somebody else. Loans and advances means you have given loan to somebody else. Okay? Okay, sir. Then what else, sir? There can be other non-current assets. What do you mean by other non-current assets, sir? Which is very miscellaneous, but it will fall under non-current assets. Those items are very small amount is very small, but we need to show them in other current assets. We need to show them in non-current assets. So we club them under other non-current assets. Clear? Okay, sir. Done. Next comes our current assets. Next comes our current assets. Sir, tell me, what is current assets, sir? I already told you 12 months. So what all can be there in 12 months? Sir, cash. Yes, good. Sir, bank. Yes. Sir, in case of cash, what do you mean by realization? Sir, what you are going to realize? You already know it is cash. See, cash realization is simple, sir. The concept of realization when it comes to cash is using that cash, you can enter into a transaction and buy something. So you are converting that cash into some other form, correct or no? Yes or no? You can convert that cash into some other form, goods, services, asset, fixed assets, correct or no? That conversion, process of conversion is within 12 months. That process of conversion is also called as realization. So cash will always be considered as current asset because you can convert cash whenever you want. If you have cash, you can buy the plot. If you have cash, you can buy the road. Sorry, it's not road. Yeah, in India you can buy that also. You can buy the road, you can buy the people, you can buy the things. I'm just telling example, don't get offended. So if you have cash, you can buy anything you want. Clear? So that is concept of realization when it comes to cash. Now bank, what is the concept of bank, sir? Again same, you can buy anything using bank balance or you can convert the same bank into cash within no time. Correct or no? Go to ATM, withdraw the money, done. Right? Yes, sir. Cash, bank, stock, debtors. Sir, what is stock, sir? Trading account. Yesterday, last class. When we purchase and when we sell, there are some items left with us. Those items are called as stock. Stock is also shown under current assets. Sir, why it is shown under current assets? Because you will not hold and keep the stock for 3 years. You will always try to sell it within next 12 months. Correct or no? If you keep it for 3 years, the stock will get expired. Yes or no, sir? If you keep it for more than 12 months, the stock will get expired. Or if you keep stock for more than 12 months, that means you are not doing the right business. Or you are not doing the business right way. Either you are not doing the correct business or you are not doing business in a correct way. ಅಷ್ಟೇ ಅರ್ಥ ಆಯ್ತಾ? ಸ್ಟಾಕ್ ಇಟ್ಕೊಂಡು ನೀವು ಮಾರಕ್ಕಾಗ್ತಿಲ್ಲ ಅಂದ್ರೆ ನೀವು ಬಿಸ್ನೆಸ್ ತಪ್ಪು ಮಾಡ್ತಿದ್ದೀರಾ, ಅಥವಾ ಸ್ಟಾಕ್ ನ ನೀವು ಎಷ್ಟೇ ಪ್ರಯತ್ನ ಪಟ್ಟರು ಮಾರಕ್ಕಾಗ್ತಿಲ್ಲ ಅಂದ್ರೆ ಯು ಆರ್ ಇನ್ ಅ ರಾಂಗ್ ಬಿಸ್ನೆಸ್. Understanding? Yes? Okay. What do you mean by realization here? Realization here means converting into sales. Converting the stock into sales. Clear? Okay, sir. Done. And debtors we have already discussed. Converting it into cash. Fixed deposits or investments will again come here. Here we call it as long-term investment. What investment? Long-term investment. Here we call it as short-term investment. Short-term investment. Long-term investments are the investments which do not get converted or which do not get realized in next 12 months. That means more than 12 months. More than 12 months. Here, less than 12 months. So, for example, fixed deposit kept for 3 months. Fixed deposits kept for 6 months. Fixed deposits kept for 9 months. You're understanding? Yes, everybody? Okay. So these are the items on your asset side. Now, if you observe very carefully, first we wrote fixed assets, then we wrote non-current assets, then we wrote current assets. Observe very, very carefully. First, those assets are coming which are very difficult to convert or to sell or to encash. The assets which are coming at the top are those assets which are very difficult to get it converted into cash form? Which are very difficult to get it converted into cash form? Fixed assets. If you decide to sell your plant and machinery, can you sell it now itself? No. It may take today, tomorrow, 1 month, 2 months, 3 months, 6 months, you don't know. But you will need time to sell the fixed assets. Same thing goes with non-current assets. Investment. If you are having fixed deposits for 3 years, can you sell that fixed deposit? I mean, can we get the money out of that fixed deposit? Answer is no. 3 years. Sir, I am having bank balance. Can you convert it into cash? Nales, bunny sir, ivagle. Just now, in 2 minutes, I'll get you cash. ATM, draw the money, cash. So if you observe carefully, what we are seeing in the pattern here is assets which can be assets which are highly liquid are shown at the bottom. Assets which are difficult in terms of liquidity are shown at the top. Sir, what do you mean by liquidity? Liquidity is nothing but how soon a particular item can be converted into cash or bank. How soon a particular item can be converted into cash or bank. That is liquidity. Can you convert fixed assets into cash immediately? No. You may need some time. You may decide to sell today, but the sale may happen after 3 months. That sale may happen after 6 months. Understanding? Yes. So liquidity is lower when it comes to fixed assets. Same thing comes with investment. Sir, suppose I have taken 5-year bond. Can you convert that bond immediately? No. You have to hold it for 5 years. So can you convert that into liquid cash immediately? Answer is no. You cannot convert it into liquid cash. Because you cannot convert it into liquid cash immediately, it becomes difficult with respect to liquidity. That is why it is showing up. The assets which are highly liquid, liquid andre simple, sir. How soon you can show it in cash? How soon you can convert it into cash? Now, current assets are the items which can be easily converted into cash. Correct or no? Bank, cash, stock, debtors. Stock, if you sell tomorrow everything. Sir, but that sales also will take some time, sir. It may happen today, tomorrow. Agree. But if you decide to sell it, you will sell it in next 12 months. Correct or no? If you decide to sell it, you will sell it in next 12 months. Correct? So that is why stock is a highly liquid asset. Of course, not as liquid as cash or bank, but still it is compared to fixed assets and non-current assets, it is liquid. Clear? So usually your asset side is represented by your liquidity. Higher the liquidity, bottom it comes. Lower the liquidity, it comes on the top. Is everybody understanding? Yes? Okay. So that is your asset side upon. That is your assets. Now let's come to liability. Sir, first what you will write, sir? First I will write here is capital account. What account? Capital account is nothing but owner's account. So what all can come under capital account, sir? Drawings or contribution. Correct or no? Whenever a person contributes the money, owner contributes the money, it will come under capital account. Whenever a person draws the money from the business, it comes out of drawings. Clear? Okay, sir. Done. What next, sir? This capital account in case of company can also be called as shareholders fund. Shareholders fund. In proprietor, it is called as capital account. Why it is capital account, sir? Because there is only one owner. Proprietor. The word proprietor itself is used when there is only single owner. We call it as capital account. But when it comes to company, there is no one owner. There are multiple owners. So the word capital gets replaced by shareholders fund. Don't worry. When we come to company accounts, we'll discuss that also in detail. But just now giving you an idea. So capital account is nothing but owner's account. Sir, shareholders fund anta heltidara sir, adu owner de tane sir. Haudu, adu owner de. Capital account is also owners. Shareholder fund is also owners only. Clear? Okay, sir. Done. Tell me what next, sir. Next item is non-current liability. Oh, super easy, sir. Here, non-current asset. Here, non-current liability. Yes, sir. Now, what is non-current liability? Same thing, sir. Which cannot be settled in next 12 months. Here, I am using the word settled. The word I am using is settled. Settled means what? Sir, liability is an obligation to pay. Liability is a obligation to pay. Correct or no? So here there is no concept of realization because we don't have right to receive something. Here we have liability to pay something. We are obligated to pay somebody. So settled is the correct word. What do you mean by settled? Settled is nothing but you have liability to pay, right? That means you are having obligation to pay. Settled is a word used when that obligation is over and you pay. That means the moment you pay to the person you owe the money. For example, I have taken 100 rupees from Mr. ABC. Okay. So I have taken 100 rupees from ABC. That means what? I owe 100 rupees to ABC. That means I need to pay ABC. I am obligated to pay ABC 100 rupees. I am obligated to pay ABC 100 rupees. The moment I decide to pay this and I make the payment, paid 100, that time what happens? My cash or bank balance will come down and my ABC balance will also come down. The moment of this payment or this process of paying or this event of paid is nothing but settled. Clear? So settled is the word used for paid. Clear? So non-current liabilities are those liabilities which are not settled in next 12 months or accounting period. Only one word changes, appa. Here it is settled, there it is realized. Okay? So what are the items, sir? Loans, vehicle loan, business loan. Then your gratuity. Sir, why gratuity is coming under non-current liability, sir? Because gratuity is not paid every year. Rather, gratuity is paid after you give 5 years of service. So when you give 5 years of service, then only gratuity will come. So you need to keep creating the provision for 5 years. That means the moment my employee works in the current year, this year's gratuity I have to create. The moment he works for 3rd year, I have to keep 3rd year provision. 4th year, I have to keep. If he completes 5th year, that means I am liable to pay him the gratuity. So gratuity is settled usually after 5 years for the employees. That too, if he quits the organization, if he continues the organization, the gratuity will keep on growing. Clear? Yes. Loans, vehicle loan, business loan, gratuity. Then any outstanding expenses which are payable after 12 months. There can be instances like that. Okay. Yes. So in short, anything which is payable after 12 months. Long-term provision anta helthivi now. What? Long-term provision. Any payment which has to be done after some time is called as long-term provision, which can be paid after 12 months. Okay. That is your non-current liability. Next comes your current liability. Here, same, sir, which gets settled in next 12 months. Example, sir. Best example, creditors. Just like how you give 15 days to 90 days at max to your debtors, in the same way, your creditor will only give 15 to 90 days. ನಿಮಗೆ ನೀವು ಕಸ್ಟಮರಿಗೆ 15ರಿಂದ 90 ದಿನ ಕೊಡ್ತಿರೋ ಹಂಗೆ ನೀವು ಯಾರ ಕಡೆಯಿಂದ ಪರ್ಚೇಸ್ ಮಾಡ್ತೀರೋ ಅವ್ರಿಗೆ ನೀವು ಕಸ್ಟಮರ್ ತಾನೆ. ಯು ಆರ್ ಅ ಕಸ್ಟಮರ್ ಟು ಹಿಮ್. Say for example, I am purchasing goods from A and I am selling it to C. C is my customer, A is my supplier when you look from my point of view. When you go to A's point of view and look at me, I am customer of A. Right? So, just like how I give only 15 to 90 days, My supplier will also give only 15 to 90 days. Okay. Then outstanding salary, electricity payable, rent payable, etc. All these things can come under current liability. Any short-term loans? Short-term loans. Sir, what do you mean by short-term loans, sir? Short-term loans. Say, for example, I have taken loan only for 3 months, 6 months or 12 months. All those things will come under current liability. So what do you mean by you have taken loan only for 6 months? That means I have taken money now, I have told bank in 6 months I will repay. That is short-term loan. Sir, banks will give money like that. They will give money like that. No issues. It depends upon your financial position. Depending upon that, they will give you loan how much ever you want and based upon time period you are asking. Am I clear? Okay. So this is your balance sheet. So here capital, non-current liability, current liability. Here fixed assets, non-current assets, current assets. Clear? Now here I told you the flow is the higher liquidity, the lower it comes on the asset side, and the lower liquidity it comes on the top side. In the same way here, the one which gets settled soon will come on the lower side. The one which will settle on a very later date or may never get settled will come here. Understanding? Here we use settlement. Here we use over liquidity. Clear? Yes, I hope people are understanding. Are you guys following? Any doubts in this? If you have any doubts, you can ask. Shall we go ahead? Yes, sir. This is your specimen of balance sheet. Specimen of balance sheet. Assets, liability, goodwill, land building, plant and machinery, furniture, fixtures, stock, sundry debtors, investment, bills receivable, cash at bank, cash in hand. Here, capital, net profit, drawings, loan, outstanding expenses, bank OD, sundry debtors, bills payable. Clear? So your classification is given here: fixed assets, current assets, liquid asset, wasting assets, intangible, fictitious. See, your goodwill is also called as fictitious asset. Remember this point. Goodwill is also called as fictitious asset. Sir, what is this fictitious asset? Sir, fictitious asset is nothing but there is no such asset. You have created it. You have only created the value of it. Such assets are called as fictitious asset. And there is no genuine value, but that value you have created and you have made that. So those are called as fictitious assets. Okay. So fixed and long-term liability, current liability, contingent liability, all these things. Now coming to contingent liability and contingent assets. Contingent liability or assets. Sir, what is this contingent liability? Sir, contingent, the word itself says. What is the meaning of contingent? Agubaudu, agdene irbodu. Contingent is a word used for 50-50 chance. Contingent is a word used for 50-50 chance. It may happen, it may not happen. But we don't know. It happens, lottery. If it doesn't happen, no lottery. Anta item ge contingent liability or contingent asset antare. Say for example, a customer has filed a complaint against me in the court. Now your advocate says, you may win, you may lose. If you win, nothing, no worry. If you lose, you may have to pay 1 crore rupees. Now that is our contingent liability. Sir, why contingent liability? Sir, if I lose, I need to pay 1 crore. Sir, if I win, nothing to pay. But if I lose, 1 crore. Sir, will you lose? I don't know. Will you win? I don't know. What are the chances, sir? 50-50. So that time what I will do is, my question to you before I answer something, will I be obligated to pay now only? Or if I put a question correctly, am I obligated right now to pay the money? What is the definition of liability, Appa? Present obligation arising from past event. Is there a present obligation to pay the customer? Yes or no? There is no present obligation to pay the customer. Obligation will come. When it will come? When the court verdict passes and court says nothing doing, paid 1 crore rupees to the customer. When court passes the judgment, that is the time it is clear that I am going to pay the money. I am obligated to pay the money. So till the court passes the judgment, I don't know whether I will pay or I don't know whether I will not pay. Both cases I don't know. I may pay, I may not pay. Correct? So, obligation may arise, obligation may not arise. So, those items we call them as contingent liability. Why we are not calling them directly liability? Because there is no present obligation. They are only based upon events which will happen in future. Understanding? And that also depends upon happening or non-happening of certain circumstances. Yes, everybody is following? Okay. So what will happen with this contingent liability, sir? Where will you show it? Contingent liability? Contingent liability or contingent asset will be shown in notes to accounts. Notes to accounts. It will not be shown in the balance sheet. Balance sheet alli assets liability ಅಂತ ಇದೆಯಲ್ಲ, ಅಲ್ಲಿ ಎಲ್ಲೂ ನಾವು ಕಂಟಿಂಜೆಂಟ್ ಅಸೆಟ್ ಕಂಟಿಂಜೆಂಟ್ ಲೈಬಿಲಿಟಿ ತೋರಿಸಲ್ಲ. ಮತ್ತೆ ಎಲ್ಲಿ ತೋರಿಸ್ತೀವಿ ಸರ್? ಐ ವಿಲ್ ಶೋ ಇಟ್ ಇನ್ ನೋಟ್ಸ್ ಟು ಅಕೌಂಟ್ಸ್. Especially contingent liability. Don't know about contingent assets is fine. Even if you don't show in notes to accounts, it's still fine. But here we will definitely show it in notes to accounts. Contingent liability. I will show it. I will write court case is going on where the customer is demanding 2 crore rupees. If court case gets settled and if we lose, then we may end up paying 1 crore rupees to this particular customer. Am I clear? Yes? Okay. Now, let's quickly talk about difference between trial balance and balance sheet. Yes, Appa. Can anybody tell me what is the difference between trial balance and balance sheet? Now, don't tell me, sir, here it is debit credit written on both sides, sir. Here no debit credit, sir. Please, not those things. Let's not get into silly things. Sir, here we represent T shape, sir. Here it is not T shape, sir. No. I want serious differences. Sir, simple differences are, in balance sheet, what are the items that will be shown? Assets and liabilities. In trial balance, what are the items that will be shown? Assets, liabilities, income and expenses. Even your capital account is also shown. So trial balance is a summary of all the transaction, whether it is income, expenses, asset, liability, capital, everything comes under trial balance. Whereas under balance sheet only assets and liabilities. Yeah, of course capital account will come. So it is a statement of assets and liability. It is a statement of debit balance and credit balance taken from the ledger of all accounts. Now, what is the use of trial balance? The use of trial balance is to check arithmetical accuracy. Correct or no? We have seen in the trial balance chapter. Trial balance can be used to test the arithmetical accuracy. But whereas balance sheet is prepared to analyze, interpret the financial position of the company or financial position of the entity. Sir, what is financial position? Now comes the word financial position we have been using from long time. Now tell me, sir, what exactly meaning financial position? See, financial position is simple. Assets total, liability total. Will it not give you an idea as to how much money we are having and how much money we need to pay to the outsiders. How much money we are having or we are going to receive, and how much money we have to pay to outsiders. ಇದು ನಮ್ಮ ಆಸ್ತಿ, ಇದು ನಮ್ಮ ಆಸ್ತಿ, ಇದು ನಮ್ಮ ಏನ್ ಹೇಳ್ತಾರಪ್ಪ, ಸಾಲ ಅಥವಾ ಕೊಡಬೇಕಾಗಿರೋಂಥದ್ದು. ಕ್ಲಿಯರ್? ಖರ್ಚು ಅಥವಾ ಕೊಡಬೇಕಾಗಿರೋಂಥದ್ದು. ಸೊ ಹೌ ಮಚ್ ಮನಿ ವಿ ಹ್ಯಾವ್ with us, either in the form of assets or in the form of cash, and how much money we have to pay to the outsiders. See, don't take capital account in outsiders. Outsiders, only these two will come, current liability and non-current liability. Only those two things will come under outsiders. So how much money we are having and how much money we have to pay to the outsiders. Are you not getting your total assets and liability position? So that is why it is called as statement of financial position. Nimma organization hakikat gottagutte. It will help you to understand the position where you are standing, whether you are having more debt than more money you have, or whether you are having more money and less debt. That can be understood. That is why it is called as financial position. Next, balances of all types of account is their personal, real, nominal. Here balances of real and personal accounts are only shown. In other words, here income, expenses, assets, liability and capital. Here assets, liability and capital. It is usually prepared at the end of each month, 3 months, 6 months, or at the end of accounting year, before preparation of trading and P&L account. It is usually prepared at the end of the year, after preparation of trading and P&L account. Sir, why we have to wait to prepare trading profit and loss account, sir? You may ask me a question, sir, why we need to prepare balance sheet only after preparing profit and loss account? Can you tell me the reason? The reason is simple, sir. When you prepare profit and loss, you get some final figure. That figure is called as net profit or net loss. That net profit or net loss should be taken to somewhere. Where to take, sir? It should be taken to capital account. And capital account is shown where, sir? In the balance sheet. Correct? So without this figure, you cannot show it in capital account. If you don't show it in capital account, your balance sheet will not tally. Yes, one more thing. Appa, iveradu figures same irtavappa. I just wanted to tell explicitly so that you guys don't get confused. Sir, idradu total same irutte sir. Adike balance sheet anta kareyadu sir. Enanta sir? Balance sheet. Assets total and liability side total will be equal, sir. That is why it is called as balance sheet. Not the one total which you make yourself. No. Naturally, it should become equal. If it is not equal, that means they have done some mistake. Okay? So, that is why profit and loss account, net profit will get added to the capital account. Your balance sheet will tally only when you get that figure. Right? So, that is why first we prepare P&L, then we prepare the balance sheet. Now, this is a controversial topic. Closing stock will not appear in trial balance. Closing stock will appear in balance sheet. See, they are telling a difference where closing stock is not appearing in trial balance, but closing stock will appear in balance sheet. See, closing stock can appear in trial balance also. Closing stock can appear in trial balance also. I have already explained it to you during trial balance. Again, I will explain it to you. Listen to me carefully. Suppose, say, I have cash of 1,000. Okay. Who bought this cash? Owner. Yes, sir. I purchased 500 rupees goods. Okay. Out of this 500, I sold goods worth 300 for 350. Cost, selling price. So what is remaining with us? Remaining is 200 rupees cost. Closing stock. You're understanding? From 1,000, I purchased 500 rupees goods. Out of 500, goods costing 300 has been sold for 350. And remaining goods 200 rupees is with us as closing stock. Now, if you prepare trial balance, how will you prepare? Debit, credit. Capital account is 1,000. Cash balance is 500. Sir, you said 1000. ಹೌದಪ್ಪ, ಬಟ್ ಅದ್ರಲ್ಲಿ ನಾವೀಗ 500 ತಗೊಂಡಿದ್ದೀವಲ್ಲ ಇಲ್ಲಿ. Correct or no? Bank balance is 350. Sir, what is this 350? 350 is the item which is the money which we have received by selling the goods. Sir, I had 1000 rupees, out of which I took 500 rupees worth of goods. So my cash balance will automatically become only 500. Now bank will become 350. Why, sir? Because I am selling the goods for 350. Okay, done, sir. Okay, na? Yes, sir. Okay, sir. Now, purchases is how much? How much did we purchase? 500. Sales 350, sir. Sales is 350, sir. Then closing stock is there? Yes, sir. Closing stock is there, sir. Understand? Tally the balance, trial balance. 1350, 1350. Only this much transaction has happened, correct? Sir, we are not showing closing stock, sir. Correct. We are not showing closing stock. Sir, then why we are not showing closing stock? Listen to me carefully. How much purchases we made? Sir, 500, sir. 500 we made. Am I showing the purchases as 500? Yes, sir. So, this 500 includes stock which has already been sold and stock which is not sold. Correct or no? This 500 includes 300 rupees item goods which are sold, and it also includes 200 unsold. So 500 is representing my goods which are sold. At the same time, it is representing my closing stock also. It is representing my closing stock also. Correct? Yes, sir. Correct, sir. Correct. That is why we are not showing closing stock separately, because this 500 consists of the goods which have already been sold and the goods which are yet to be sold. So it includes goods which are sold, plus it also includes our stock. Clear? Okay. Now, if no, sir, but I want to show the closing stock. Okay, you want to show the closing stock? Okay, sir. Cash 500. Capital 1000. Bank 350. Sales 350. Purchases 300. Closing stock 200. You are understanding what we did here? Here we showed the entire purchases at 500, but here we are showing purchases only at 300. Remaining we are showing it as closing stock. Ultimately, your debit side is having 300 only. Your debit side is having 500 only, but it is split between two. One sold, one closing stock. Understanding? Here we showed the entire thing in 500 only. So what did you understand by this? The rule is simple. If you show the closing stock in trial balance, then that amount will be reduced from your purchases. Sir, my purchases was 500. Out of this, 200 is my closing stock. So what is remaining? 300. Only this 300 will go in your trial balance, and this 200 will go as closing stock. If you want to show closing stock separately. Sir, I don't want to show, sorry. Excuse. Sir, I don't want to show closing stock separately. Fine, don't show. Show it entirely as purchases. Clear? So, don't consider that trial balance ಅಲ್ಲಿ closing stock ಬರದೇ ಇಲ್ಲ ಅಂತ. ಬರ್ಬೋದು, ಬಂದ್ರೆ ಟ್ರೀಟ್ಮೆಂಟ್ ಬೇರೆ ತರ ಇರುತ್ತೆ, ಬಂದಿಲ್ಲ ಅಂದ್ರೆ ಟ್ರೀಟ್ಮೆಂಟ್ ಬೇರೆ ತರ ಇರುತ್ತೆ. ಬಂದ್ರೆ ಆ ಕ್ಲೋಸಿಂಗ್ ಸ್ಟಾಕ್ ವ್ಯಾಲ್ಯೂ ಪರ್ಚೇಸ್ ಇಂದ ಡಿಕ್ರೀಸ್ ಮಾಡ್ತಾರೆ. ಕ್ಲಿಯರ್? ಓಕೆ. It is prepared for internal use, it is prepared for external use. Difference between profit and loss account and balance sheet. Profit and loss account is an account. Balance sheet is a statement of assets and liabilities. This is your favorite, correct or no? Profit and loss account is an account. Here it is a statement. Statement of what? Statement of assets and liabilities. Profit and loss account shows the profits earned or losses incurred during the accounting period. Balance sheet shows the financial position of the business as on that date. As on that date. Please write down this. Please, I request you to please write down. As on that date. Profit and loss account is prepared for the accounting period. Balance sheet is prepared as at the last day of the accounting period. The accounts that are transferred to P&L account are closed and cease to exist. The accounts which are shown in the balance sheet does not lose their identity and become the opening balance in the next accounting period. ಏನಾದ್ರು ಹೊಸದಿದೆನಪ್ಪ ಇದರಲ್ಲಿ? I have kept on telling 100 times in so many classes. Your assets and liability accounts will never get closed. They will be carry forwarded. Your income and expense accounts will get closed and the amount will be transferred to your P&L account. Clear? Any doubts in this? Okay. Please go through this once, both the differences. I request you to please go through both the differences once. Okay, we shall start or continue our discussion. Now, recording of few adjustment entries. We are going to look at adjustment entries now. We have already discussed few of the entries, but we'll discuss again and we'll finalize the things. Sir, the first one is your closing stock. Just now we saw, right, this trial balance. Where did that go? We erased it. Here. Now, let's say for this one, we'll prepare a trading account. How the trading account will look like? Sir, buy sales. Correct, Appa? Yes, sir. Buy sales. How much? 350. Two purchases. 500, sir. Sir, correct, sir. 500, sir. But there is closing stock with us, sir. Yes, sir. By closing stock. Okay. Not to confuse you, I'll just write down like this so that you understand in a better way. Yes, sir. Your trading account format only you tell, sir. 2 opening stock, 2 purchases, by sales, by closing stock. ಇದು ನಿಮ್ದು ಫಾರ್ಮ್ಯಾಟ್ ಕರೆಕ್ಟಾ? ಈಗ ಡೈರೆಕ್ಟ್ ಎಕ್ಸ್ಪೆನ್ಸ್ ಇಲ್ಲ ಅನ್ಕೊಳ್ಳಿ. ಓಕೆ, ದಿಸ್ ಇಸ್ ಯುವರ್ ಫಾರ್ಮ್ಯಾಟ್. ಇಸ್ ದೇರ್ ಎನಿ ಓಪನಿಂಗ್ ಸ್ಟಾಕ್? ನೋ ಸರ್, ನಥಿಂಗ್ ಇಸ್ ದೇರ್ ಸರ್. ಇಸ್ ದೇರ್ ಪರ್ಚೇಸಸ್? ಎಸ್ ಸರ್, 500 sir. Is there any sales? Yes sir. How much? 350. Is there any closing stock? Answer is yes, there is closing stock. Out of this 500, how much you have sold? 300. How much is remaining? 200. That will come as closing stock. Sir, only in trial balance you will show 500 as purchases, but when it comes to trading account you will have to show the closing stock. Otherwise what will happen? If you remember correctly in the last class, if you don't show the closing stock at all, then all your profit or loss gets adjusted. How much is the profit actually I have made? 300 worth of goods I have sold it for 350. So what is the profit I have made? 50 rupees. If I don't take this 200 rupees, then what happens? 500 minus 350, 150 loss, which is not correct. Actually, I have made a profit of 50. That has to get captured, correct or no? So to that has to get captured, you need to understand how much is the closing stock. My closing stock is 200. So what is the balance? Here it is 550. Here it is 500. 50 rupees will be to gross profit. So this which we recorded will be recorded if this is the way you prepare the trial balance. If this is how you prepare the trial balance, then to record this closing stock in the trading account, to record this closing stock in the trading account, to record this closing stock in the trading account, if you are using this type of trial balance, then the journal entry you will pass is closing stock account debit to trading account. To trading account 200. Now this, by this entry in trading account, you are showing the closing stock and your closing stock account. What will happen in the closing stock account? Simple sir. To trading account 200, close, by balance carry it down 200. We have to show this closing stock will be shown in balance sheet also, correct or no? Hello? If you remember, closing stock, I have erased it, but closing stock needs to be shown in the balance sheet, correct or no? It is a asset item. Asset item will always have balance, which will be carry forwarded. You are understanding? So the whole point is, if you are having a trial balance where you are not showing closing stock separately, if you are not showing closing stock separately, now when you prepare the trading account, you need to create the closing stock. Why? Because your trial balance is not showing the closing stock correctly, or it is not showing separately. Now you have to create a closing stock. To create that closing stock, what you will do? Closing stock is an asset. When asset goes up, it will be debited. So closing stock is an asset. It is going up, so it will be debited. 2 sir, 2 will be trading account. Sir, why trading account, sir? Because your purchases is already shown in the trading account. So if you want to reduce any account, it should be trading account. Why we have to reduce anything from trading account, sir? Why not we can directly reduce from purchase account? I will come next. But now you understand. Because now whatever purchases we have made, it is already posted to trading account. Now if you want to do any changes, you have to do the changes in trading account only. So that is why we are reducing our trading account also. We are reducing our trading account also. Understanding everybody? So closing stock account debit. If you remember the debit side, no, credit side automatically will come. Always remember, closing stock is an asset. When asset goes up, it will be debited. Now we come to know that there is a stock. The moment we come to know stock is there, that means our asset has to go up. So that is why closing stock account will be debited. Clear? Credit will be to trading account. Now what happens? In trading account, we'll record the closing stock. And in closing stock account, This will come and there will be balance carry forward. Why? Because this has to be shown in the balance sheet. Is everybody following? Yes, is everyone following? Okay. Now, coming to this type of trial balance, how to do, sir? In case of this type of trial balance, what will happen? I will tell you. What was your purchases? Sir, my purchases was 500. From whom you purchased? Suppose I have purchased from XYZ. What is the journal entry you would have passed? Purchase account debit, not XYZ. I have purchased it using cash. Correct or no? Okay, let's take cash. Purchase account debit 500 to XYZ 500. Correct, sir. Correct. But in trial balance, you have created closing stock, correct or no? Have you created closing stock? Yes, sir. How did you create that closing stock? You have to increase your stock. When you have to increase your stock, what is the entry? Closing stock account debit to here trading account will not come. Why trading account will not come? Because you are showing the closing stock in trial balance itself. In the last transaction, you didn't show closing stock in trial balance. That is why what is the entry we recorded? Closing stock account to trading account. Why? Because entire purchase was posted to trading account. Now, you are not waiting till trading account is created to calculate the closing stock. You already have calculated the closing stock, and that closing stock will be moved from purchases to purchases. Step. Closing stock account debit to purchases. Understanding? Now, if you prepare trading account for this balance sheet, for this trial balance, if you prepare trading account, how it will look? See here, trading account. By sales, how much? 350. To opening stock, nothing. To purchases, it will be 300 only. Sir, why it will be 300? See, you debited 500, you credited 200. What is remaining? 300. See here, but in this case, how much it was? 500. Because it was 500, I had to create the closing stock here. But in this case, I have already created the closing stock. Purchase was debited 500, credited 200, remaining 300 is transferred to trading account. And this closing stock will directly go to balance sheet. Now here, by closing stock, baralla. Why? Because closing stock is already created in the trial balance itself. Closing stock is already created in the trial balance itself. So ultimately, what is the profit? 350, 350, profit is 50. If you look carefully, my profit figure has not changed. I have not changed the profit figure. Profit figure remains the same. What changed? Here, purchases was shown at 500, closing stock was shown at 200. Ultimately, net effect how much? 300. Here, in this case, what happens? Purchases is shown at 300, closing stock, nothing. Why? Net effect only 300. So what is the difference? Here the difference is closing stock is created in trading account. Here closing stock is created from purchases account. That is why when you prepare the trading account, your purchase will show net balance only. Will show net balance only. Guys, honest question. Did you guys understand the concept? Because this is highly basic but a very good concept. If you understand this till your end of your career, it will be helpful. Otherwise, it will get difficult. That is why I'm asking. If you have understood, tell me yes. If you have not understood, please ask me. I can repeat again. Please let me know whether you have understood the concept or not. Online students, please. Have you guys understood the concept? If you have not understood, you can say, no, sir, please repeat. I can repeat again. If you have understood, a small thumbs up can also be helpful for me to know whether you have understood or not. No results, huh? Hello, please take a decision whether you have understood or you have not understood. Okay. Okay. So, sir, what would you suggest? Which is the better option, sir? I would suggest the better option, always go for this method. That means you always pass closing stock from trading account only. That means always show closing stock in the trading account. This method where you don't show closing stock, don't follow. Always show closing account in the trading account only, closing stock in the trading account only. Under trial balance, don't show closing stock. Don't show closing stock in trial balance. You show closing stock in your trading account. Sorry for scratching so many things just to make you understand. Okay, I'll move ahead with then. Now, the second one, accrued or outstanding expenses. Understand, salary is paid how, appa? In simple terms, say for example, from 1st April to 30th April, salary is paid for this 30 days, correct? Huh? Yes or no? Yes, sir, correct, sir. But understand, even though I need to pay salary for this 30 days, my salary processing will happen on 2nd May. Sir, why, sir, why? Because I need to calculate after 30th April, you log out, suppose you log out at 6 o'clock. So my HR has to wait till you log out to calculate your salary. ಅಂದ್ರೆ ನೀವು 6 ಗಂಟೆಗೆ ಮನೆಗೆ ಹೊರಟ ಮೇಲೆ ನಮ್ಮ HR ಟೀಮ್ ಕೂತ್ಕೊಂಡು 6 ಗಂಟೆ ಮೇಲೆ ಕೆಲಸ ಮಾಡಬೇಕು. ಆಗಲ್ಲ. Correct or no? So that is why what they do, they process the salary in next 2 days. So what they do, on 1st May they come, they check all the attendance and then process the salary. But my question to you, whether the salary was due on this day or salary is due on this day? Whether the salary is due on here or due here? Salary is due here, paid here. You're understanding? Salary is actually due here, paid here. Understanding? On 30th April only, the moment you log out, you are eligible to collect the salary and I am obligated to pay your salary. You are eligible to collect the salary, I am obligated to pay your salary. That's it. When I will make the payment is a different story. But on 30th April, you are eligible and I am obligated. Yes or no? Yes or no? Yes. So, my obligation is there to pay on 30th April itself. I am obligated to pay you on 30th April itself. Understanding? Yes, sir. Correct. So, on 30th April, what is the entry I need to record? Salary is an expenses, sir. Yes, sir. Salary is an expenses, sir. So, expense goes up or comes down when I pay salary? Expense goes up. So, salary account debit. Salary is an expense account. When expense goes up, it will be debited. Correct or no? Yes, sir. Now, 2. Now, if I would have paid it now itself, then 2 would be bank account. Correct or no? Why? Because salary is going from bank. My bank balance will come down. When asset comes down, it will be credited. Correct? Yes, sir. Correct, sir. But am I paying it on 30th April itself? No. When I am paying? On 2nd May. So, 2 days I am not paying. But am I obligated to pay? Yes. That means, am I liable to pay? Yes. So liability is there? Yes, sir. Liability is there. So can I create a liability account for this? Yes, sir. You can create a liability account. So when liability goes up, it will be credited. So what is the entry I will find? To outstanding salary. To outstanding salary account. Or you can even use to salary payable account. To salary payable account. Anything, not only salary, you can take example of rent also. Usually if you have seen, rent should be paid before 5th of next month. So does that mean your rent gets due on 5th? No, your rent gets due on 30th only. So what is the entry? Rent account debit to rent payable or outstanding rent. Just like this only, electricity also, electricity bill account or electricity expense account debit to outstanding electricity or electricity payable. This is the entry. I hope everybody has understood. See here, salary for March 2024, 7,000 has not been made, has not been paid. The adjustment entry will be salary account debit to outstanding salary account. Am I clear? Yes? Any doubts in this? Okay, done. Now, next adjustment is for prepaid expenses. I have already explained you the concept of prepaid expenses. I'll explain it to you again. Listen to me very carefully. I have taken insurance on February 2026. Bought insurance on February 2026 for say 12,000. And insurance is for 12 months. How much? 12 months. Insurance is for 12 months. Now my question to you, when you bought the insurance in February 2026, what is the entry you will pass? Is it an expenses insurance? Yes, sir, it is an expenses. So you will pass insurance expense account debit to bank account. Will you pass this entry? Will you pass this entry? Yes, yes, sir. 12,000, 12,000. Okay, you pass the entry. Good, very good. My question to you, simple question to you. If you have passed this entry, please listen to me carefully. My question to you, insurance is for how many months? 12 months. Yes, sir, 12 months. When did you purchase the insurance? February, sir. Okay. When are your books getting closed? On 31st March, sir. So, my question to you, on 31st March 2026, you have recorded in your P&L as insurance expenses 12,000 rupees. Correct? Yes, sir, correct. So, does that mean this 12,000 is already used by 31st March 2026? That means, is the entire insurance completed by 31st March 2026? So, entire insurance amount, whichever you pay 12,000, is it completely utilized before 31st March 2026? Or it can be used for next 12 months, which is up to January 2027. Correct or no? Insurance is for next 12 months, but you are paying in advance. It is an expenses, but that expenses is paid in advance. Correct or no? So, if you pay 12,000 for 12 months, then how much you are paying per month? 1,000 rupees. How much you are paying? 1,000 rupees per month. So, how many months of insurance you are using in the current year? Only 2 months, February, March. So, how much should the expenses actually look like? The expenses should be only 2,000 rupees, not 12,000. Huh? Yes, sir. You have paid 12,000 for 12 months. How many months have passed from the date you have taken insurance? 2 months. So, how much should be actually expenses? 2,000 rupees. Because only 2 months has been passed. Sir, then what happens to the remaining? The remaining will be called as prepaid expenses. What expenses? Prepaid expenses. All your mobile phones are prepaid. All your mobile phones are prepaid. That means you pay the money and then utilize it for next 3 months. Correct? In the same way, this insurance is paid now, but you are going to use it in future. Understanding? In that, I have already used 2 months, but remaining 10 months is there. That remaining 10 months portion is called as prepaid expenses. So, from insurance expenses, out of this 12,000, some portion will go as prepaid expenses. Some portion will be going to P&L as current period expenses. So, in our question, the prepaid expense will be, so prepaid expenses is also an asset account. Why asset account, sir? Because we have paid in advance. So tomorrow if I cancel the insurance, I can get the money. Surrender value and insurance only. Okay, I can get the money. In vehicle insurance and all those insurance, there is no cancellation policy. If you cancel also, you will still be covered for next 12 months. Right to receive money bidi, but right to receive economic benefit. Correct or no? Tomorrow if your vehicle meets with an accident, the insurance company will pay the money. Correct? So right to receive economic benefit is there. Correct? So that is why it is prepaid expenses, and prepaid expense is an asset because you have right to receive the economic benefit. When asset goes up, it will be debited. So prepaid expense account debit 10,000 to insurance expenses 10,000. So here we debited insurance by 12,000. Now we crediting it by 10,000. So what is the net effect? Net effect is only 2,000. Sir, where will this prepaid expenses go to? This will go under current assets. It will go under current assets. Why? Because you are going to utilize in next 12 months. You are going to realize in next 12 months. Correct or no? Realize means what? You can get it converted into cash component or service component. Correct or no? If you meet with an accident, immediately the money will be paid to you. Clear? Everybody is understanding? Yes. So prepaid expenses is a current asset because you can utilize it in within next 12 months. So prepaid expense account debit to insurance expenses. Is everybody following me? Okay. So insurance. Okay. Yeah. Accrued or outstanding income. Now, I'll give you a classic example which happens usually with the banks. So suppose let's say you have kept 10,000 in bank. Okay. And bank is paying 1% interest per month. How much? 1% interest per month. But bank will pay interest in the month of okay. So bank is paying interest 4 times a year. How much? 4 times a year. April, July, October, January. Now understand one thing. When bank pays interest, it will pay for 3 months. Correct or no? 4 times a year and 3 months. 12 divided by 4, 3 months each. So in the month of April, whatever interest is paid, it is for what? Whatever interest is paid in the month of April, it is from Jan to March. And here whatever is paid is from April to June. And here July to September. Here October to December. 3 months, 3 months, 3 months, 3 months. Okay? Yes, sir. Correct, sir. So here it will be 1% and the rest of 100 rupees per month, 300, 300, 300, 300. Is everybody following? Yes, sir. Following. Now, you are following financial year. When does your financial year start up? Say, for example, April 2025 to March 2026. Okay, very good. Suppose you have received all this interest. What is the entry you pass? Sir, very easy, sir. Bank account debit to interest account, sir. Very good. April allu ide entry, July allu ide entry, October allu ide entry, January nallu ide entry. 300 every time I will pass. Okay, very good, correct. Now my question to you, this 300 is there, no? This 300 is there, no? For which period this 300 is paid for? Jan to March. Jan to March, which Jan to March? Jan 2025 to March 2025. This period belongs to previous financial year, correct or no? That is 24-25. That is April 24 to March 25. Whether this 300 is there, no? Whether this 300 belongs to, sorry, whether this 300 belongs to the current year, answer is no, sir. It doesn't belong. It belongs to the previous year. Why? Because our period starts from April, sir, and it will go up till March, sir. April when, sir? April 25 to March 26, sir. But this is when, sir? April 25 to March 25. This is not our financial year, sir. This belongs to previous financial year. So this is not your income. Is this your income? Yes. Is this your income? Yes. Is this your income? Yes. Sir, what happens with January to March, sir? This is going to be received in the next financial year, sir. Correct? Correct, sir. But is that income of the current year? Answer is yes. That is income of the current year. Why? Because Jan to March falls under this financial year. It falls under this financial year. But interest is paid in the next financial year. Jan to March interest belongs to this financial year, but that interest is being paid in the next month, April. Sir, why it gets paid in the next month, April? Is after 31st March, end of the day at 12 o'clock, looking at the balance on 1st April, the amounts get created. But that amount is coming in the month of April. Your bank balance is getting adjusted only on April. Correct or no? But that interest belongs to which period? Sir, from Jan to March. Right? Yes or no? Correct. So, this 300 interest, which you will receive in April 2026, belongs to which year? It belongs to this period. Correct? How this, sir? How this, sir? So that means we have income receivable. Income is earned, sir, already. Income is earned. Why? Because April, Feb, March, 3 months belong to the current financial year, and I have maintained 10,000 in my SB account for these 3 months. So these 3 months belongs to current year, and I have maintained SP balance of 10,000. So I am earning interest on that. Only thing is, I am not receiving the interest right now. I will receive it in the month of April. But question is interest yours? Is interest earned? Yes, sir. Interest is already earned. The moment you keep the balance for January, February, March and April, you are already earning the interest. Clear? So, interest income is already earned. So, when income is earned, it is nothing but increase in the income. When income increases, it will be credited. So, to interest account 300. When we will pass this entry? On 31st March. To record what? To record this interest. But whether has this interest already been received in your bank account? No, sir, it has not been received in our bank account. Correct, sir. So, what we will do? We will show it in bank account or no? No, we can't show it in bank account. Why we can't show in bank account? Because it is not yet received, sir. Right. So, what we can show? Is it receivable? Yes, sir, it is receivable. So, can we show it as receivable? Yes, it can be shown as receivable. Interest receivable account debit 300 to interest account 300. This will go to P&L. This will go to balance sheet as current assets. As current assets. Clear? Sir, what will happen when they pay? Let's see that only, sir. On 1st April, they paid. Correct? Yes, sir, they paid, sir. How will record, sir? Bank account debit, sir. Yes, correct. Bank account debit. Why we are receiving in the bank account? Yes, sir, correct. Now, 2, don't pass it to interest income. Why? Because this 300 is not interest income of current year. It is interest income of previous year. And that previous year, we have already recorded the income. So, where we should show it, sir? We will adjust it against the receivable. That is the asset. So, to interest receivable. Because earlier there was receivable. Now it is no more receivable. Why? Because we have already received the money in our bank account. So, it becomes 0. In other words, accrual concept. Income should be recognized as and when it is earned. When did you earn this interest? I earned this interest in Jan, Feb, March. So recognize the interest in Jan, Feb, March only. So I recognized the income in Jan, Feb, March. And I showed the receivable. Once I get the money, I will adjust it against the receivable. In other words, if you have sold goods in the month of March, but you have not collected the cash from him, will you not record the sales or will you record the sales? If you have sold goods to a customer and he has not paid the money, he said he will pay the money in the month of April. Will you record the sales or will you not record the sales? You will record the sales, correct or no? You will not wait till money is being collected. Correct? When you collect the money, you will pass it to the debtors. When you record the sales, what is the entry you pass? Debtor account debit to sales account. When you receive the money, bank account debit to debtor account. Similarly, asset account debit to income account. When I receive the money, bank account debit to that particular asset which you have created. Am I clear? Any doubts in this part? Clear? This is first one. This is the second one. Sorry, not this one. Leave it. I'll explain this also. This part I will explain it now. Okay, now coming to the next. Sir, I have kept the money in the bank account, correct? There is one bank, sir, where what happens, you know, sir? 1,000 rupees if I keep for 3 months, they will pay the interest in advance. Suppose I kept the money February 26, 1,000 rupees, and they are paying 1% interest for 3 months. And this 1% interest for 3 months will become 300 rupees. Say 10,000 is the deposit. Then 300 will be paid in advance on 1st February itself, sir. On 1st February itself, they will pay advance. That means when you go to deposit 10,000 rupees, immediately they will give you 300 rupees advance. But your money, 10,000 rupees is locked for 3 months. That money you cannot withdraw. ನೀವು ಓವರ್ ಸ್ಮಾರ್ಟ್ ಆಗಿ ಸರ್ 300 ರೂಪಾಯಿ ಬಂದ್ರೆ ನಾನು 10,000 ತಗೊಂಡು ಬಂದ್ಬಿಡ್ತೀನಿ. ಇಲ್ಲ. The moment you give the 10,000, it gets locked for 3 months, but income is paid immediately. That is 300 rupees. Now my question to you, what is the income per month? The income per month is 100 rupees. Correct? Feb, March, April. 3 months income. Now your books of accounts get closed here. Correct? So when you receive this income, what is the entry you will pass? Bank account debit 300 to interest income 300. Correct? First thing, ellaru adne madadu. Sir, interest is an income, so I'll pass it as an income. Correct. But when your books are prepared on 31st March, so when you prepare books of account, how much interest you have actually earned? You have earned interest of only 2 months. Why? Because only 2 months you have kept in the bank account. 3rd month is next month. Adu munde. Accrual concept. What does it say? Record the income which is actually earned. You have earned only this 2 months income. You are yet to earn this month income. So what they want to say is, whichever income has been received in advance, you will reverse that income and create a liability. So what is the entry will pass? This interest we have to reverse. How much? Interest account debit 100. Correct? Sir, okay sir, done. I have reversed the income. When we reverse the income, it will be debited. What I will do, sir? What I will do? I will create advance interest received. Okay, sir. What is this account, sir? What is the nature of this account? The nature of this account is liability account. Sir, why it is liability account, sir? Suppose, say, tomorrow on 1st April, bank said, take back your 10,000 rupees, keep only 200 rupees, give me back 100 rupees. Will you need to pay that 100 rupees? Answer is yes. Because bank has kept your money for 2 months, they have paid interest for 2 months. Now all they are asking is, take this money back of 10,000, give us back the extra 100 rupees which I have given to you. Will you be liable to pay? Answer is yes. Why? They are giving you principal, they have already given 2 months money. What they are not giving? 1 more month money. Why they are not giving? Because they are repaying your original money. If they repay the original money, why will they pay the interest? Understanding? So in such case, whether the bank has a right to ask the money from us? Yes, sir. Whether we are having obligation to pay them? Yes, sir. We are having obligation to pay them. That is why this will become our current liability to advance interest received. It will be shown under current liability, because if the bank decides to give us our principal back and ask back the advance interest, you can ask back and we have to pay them. Understanding, everybody? Yes. Okay. So that is why this will be our current liability. This is reversal of income. Reversal of income. So this is also completed. This we have already discussed. Depreciation account to fixed assets account, or one more is depreciation account debit to provision for depreciation. Provision for depreciation. This one. Okay. Okay, this part and next part I will discuss in the next class. It's already 8. So we'll close the class today for this much. Now my humble request to you guys. 1 second. Okay, my humble request to you, please revise whatever we have discussed today. All you have to do is, starting from the beginning of this chapter till this one, you please go home and please revise. That is my sincere request, because if you don't revise, it will be very difficult for you to understand going forward. Because there are few more journal entries which we will discuss in the next class, and we will actually start solving the sums. And there are 4 to 5 illustrations which we solve. So if you want to get hang of those illustrations, please, I request you to please go home, please read, and then please come to the next class. Am I clear? Everybody? Yes? Okay. Thank you very much. Bye bye.